Welcome back. This is still Strictly Money, a special Strictly Money with a Davos special, of course, taking place this week. Investors, they're always on the lookout, though, for new ways to predict how the markets will move. My next guest has found a unique way of doing it by using Twitter. He's even launching a new hedge fund to profit from his findings. Let's figure out how on earth this works. For more, we're joined by, well, two people. Paul Houghton, Managing Director and founder of Derwent Capital Markets, and also Professor Johan Bollen, Associate Professor for the Center for Complex Networks and Systems from Indiana University. Johan, Paul, good to see you. Welcome.
Nice to see you. Thank you.
What's the story? Paul, it's your hedge fund, right?
It is, yeah.
So talk to us about what exactly it is that you've done and how you've used the professor's data as well.
Sure, okay. Well, I'm a quantitative hedge fund manager, so I'm always on the lookout for the next best way we can find an edge and stay ahead of the market. And I saw an article on Bloomberg 4 or 5 months ago detailing some work that Professor Johan had done. And I was really fascinated by it. And basically, if Johan, you want to explain a little bit about the detail.
Please.
Yeah, sure, I can. So what we did is we took all tweets, public tweets submitted in 2008, about 10 million for a couple of million users, and we analyzed those tweets, the content of those tweets, to determine the public mood state. So that people are particularly happy, particularly sad, very calm, very nervous, and then we correlated that to the Dow Jones Industrial Average closing values. And what we found is not just a correlation, but a predictive correlation 3 or 4 days out. And one of my students actually showed me that we could predict the closing value of the Dow Jones Industrial Average 3 days out with an accuracy of about 86.7%.
It sounds too good to be true,
Yeah.
because I guess you assume that people tweeting, you know, it is a mood, yeah, but they don't necessarily act on that mood, or do they, Ross? What have you found? You've been tweeting this week.
Well, this is fascinating. I see to think that what I tweet now goes into an algorithmic calculation, which I guess is what you're saying, Johan. I mean, how do you then use that, Paul? You take his mood. How are you reacting on it in terms of the investment?
Yeah. Well, it's since you've got millions of users, right? Every user contributes just a little bit to the public mood state, and we don't really understand how that public mood state affects the markets. But it's not entirely inconceivable to assume that the public mood, if people get particularly nervous, that does change investment strategies and may have an effect on the markets.
And is the fund then up and running now? I mean,
the fund's going to launch on the 1st of April this year. We've had a massive amount of interest from high net worth individuals, private investors particularly. And what we're looking to do is Johan's signals gives us a huge edge on the market. And it gives us an indication as to where we're going to see the market going in the next 2 to 3 days. So, you know, that's invaluable information for us, as you can imagine.
But Paul, I'll get David's view on this in a second. This, it seems to me, it's either one of those brilliant ideas that's going to work, or it's going to be a complete flop.
Yeah,
I get that sense.
Yeah, we're getting, and quite right. I mean, people are going to look at this with a lot of skepticism, and they're going to think, you know, this is either a genius or it's got no grounds at all. But I think we're very confident in the system, and I think that as soon as people start to follow the fund and we start publicising our NAV, and they see that from the 1st of April onwards, the numbers will speak.
Johan, what are the key words that you're looking for in those tweets, or is that intellectual property on your part?
Yes, I would say so. I mean, there's a whole variety. It's not just the terms that we look at, but particular combinations that seem to be most indicative of the public mood state. And I can tell you that we measure mood state along 6 mood dimensions, and each of those dimensions could have a particular predictive effect towards the market. But yeah, I mean, without going too much into details, we published a paper. It's a peer-reviewed paper. It's in the Journal of Computational Science. And so for people interested in more technical details,
how does that differ from, say, the confidence index, you know, that many of these organizations out there try and tap into?
Well, it's very, I mean, I think it's a little more fine-grained than that. Again, it's based on psychological research. It's based on a psychological mood test that's been in practice for 40 years, been well validated, measures the public mood along 6 particular dimensions that seem to have a strong predictive effect towards the Dow Jones Industrial Average and perhaps other market indicators as well.
Ross.
Johan, I'm running a hat competition here in Davos where I'm getting people to vote. I'm taking photographs and getting people to vote on their favourite hat. So does that feed into it or not? Because it's not about the economy, but it's a mood thing. Does that feed into it?
Yeah, it would feed into it, but that would be just 5 or 6 tweets, or perhaps a little more over, millions of tweets. I mean, you have to understand, Twitter right now, I think, has about 100 million users and about 90 million tweets per day. So it's, it's a very large-scale analysis that we're conducting, and it's absolutely true. All of these tweets contribute a tiny little bit to our signal, but yeah.
I guess. I mean, I have a Twitter account, but I don't really use it. I mean, I think I opened it just to see what it was. But maybe I should. But I mean, who tweets? Because I always tend to think, well, people who are really busy don't tweet because they don't have time to tweet. But I might be wrong there.
Well, well, with 100 million users, 150 million users, you've got a population the size of half of Western Europe. I mean, most industrialized nations don't have populations like that. And so I've been asked that question very often. Who tweets? Well, how does that represent the population? Yeah. And how does that have any bearing on the market? And
you might be following 16-year-old kids in your analysis, for all you know.
Absolutely. Yeah. But they could be like a canary in a coal mine. We found a predictive correlation, but we do not necessarily understand the causative mechanisms. Yeah. And perhaps you don't even have to. Yeah. But that's for future research.
Well,
does it work for going long as well as short on the market?
It does, absolutely. We see a change in sentiment, a change in mood state on the Twitter users, and we can not only just see predictive direction, i.e. whether the market's feeling nervous and we see a downturn in the market, but it's also the magnitude of that movement as well. So if we see a significant change in sentiment over a short period of time, that is reflective of the magnitude of movement on the Dow Jones as well. So it really is groundbreaking stuff.
Guys, thank you very much. We might be seeing you, David, on Twitter or tweeting.
Well, why not? Yeah.
Well, precisely, exactly.
An old dinosaur like me could go on Twitter.
You never know. You have a huge following tomorrow. David, thank you very much for being with us. Our guest host for the hour, David Kuo. Also, thank you to both of you, Professor Johan Bolen, Associate Professor for the Center for Complex Networks and Systems from Indiana University. It sounds very fancy. And also thank you to you, Paul, as well. Paul Houghton, Managing Director and Founder of Derwent Capital Markets.